If 20,000 naira is missing from your business today, how long will it take you to know that you are missing money? For small businesses, some weeks or never at all. Let's watch this video to see how you can find out you're missing money at the time when you can salvage it. Welcome to Audits Associates Accounting and Finance Tutors. Like I said, 1 to 7 dealt specifically with finance and accounting issues. The 8th one dealt with do it yourself, which might not be finance issues or accounting issues, but owner's issue. Now, we're also going to take this last one, which is going to deal with auditing issues, not conducting regular audits. This is one of the problems that we have in small businesses. Many small businesses owners see audits as something meant for big corporations, banks or companies listed on the stock exchange. To them, auditing sounds expensive, unnecessary, or even threatening. Some say, I know what is happening in my business, while others fear that audits will expose mistakes they would rather not confront. Unfortunately, not conducting regular audits is one of the silent killers of small businesses. Audits are not only about fraud detection. They are about control, discipline, transparency, and sustainability. Business rarely collapse suddenly. Of course, it takes time. They decline gradually, often because problems go undetected for too long. In this series, or in this lecture, I'm going to explain what audits really are, why small businesses avoid them, or why they need to engage in it, how the absence of regular audits weakens and eventually destroys business. Now, what do we see audit to be? An audit is an independent and systematic examination of business records, processes, and controls to determine whether they are accurate, reliable, and compliant with established standards. So we can see that it's not just financial. The systems need to be audited regularly, not just the finance or the financial system. We don't limit our audits to external statutory audits or year-end financial statements. They include internal audits, operational audits, compliance audits, cash and inventory audits. So these are different types of audits. Internal audits is all-encompassing of an internal auditor, a staff that is working there, and it's done alongside the business. Operational audits look at the operation system. Compliance audits look at whether the systems standards are being complied with. Cash and inventory audits. This is part of reconciliation and auditing. The goal of auditing is not punishment, but early detection of errors and then how to correct them. Some issues that are revealed by auditing are not fraudulent. They are common mistakes or ordinary mistakes that people make, errors that, if detected early, can be corrected and help the business grow. But if they are not detected early, can kill the business. Why do small businesses avoid regular audits? They are concerned with costs. It's expensive to actually do that. They are also afraid of exposure. Mistakes may be revealed and all those things. They also have that confidence that I am the one running the business, so I know there is no need for that. Some of them are not actually aware. They lack understanding and awareness. and they operate heavily informally. But the opposite side is that businesses that fear audits the most are often ones that need them urgently. In a business that is not audited regularly, financial misstatements go undetected. This might not have been done because you want to defraud, but by ordinary error. And your financial statement is not what it's supposed to be. Once they are seeing money coming in as sales, they are okay with it. But however, in recording sales, if there are errors in recording sales, your profit will not be correct and your business will not grow in the right direction. You have misleading financial reports. Even your expenses will be either overstated or understated. The same thing happens to profit. If you did not audit your business, decisions you make will be based on unaudited information, which might be wrong, overstated, or understated. Why does audit matter? Audits verify the accuracy of financial records and ensure that reported profits are real, not imaginary, not what you think. If it's not done, owners might believe that the business is profitable while it is actually struggling. There are most businesses today that the profits, the margin is very little. So most of the time it is the owner's cash that is recycling. So as the cash is coming in and going out, you think you are making profit. It's only when you do audits that you find out that most of this cash you are seeing is not profits. They are your investments. When audits is not done, fraud and asset theft thrive in silence. They can steal your money, they can steal your property, and you will not know until you do audit. If you see fraud, most of the time it doesn't start big. It starts little by little. The people who want to defraud you, they will pinch a little and see whether you react. You did not react, they continue. There is a business that somebody who left the business was stealing money after he has left because he set the POS in such a way that at the end of the month, the balance of the account is automatically lodged into his account. However, the shortage has been 50,000, 100,000, 150, and the business did not notice until a month where the balance in the account was 2 point something million. And this is the money that the owner of the business wanted to use to pay salary, only for him to go the next day and the money was cleared. By the time we audited the bank statement, we found out that the person has collected up to 10 million within the period the person left the company. So this is one of the problems. If this has been followed up, it wouldn't have been like that. The job of the audits is to stop fraud, detect fraud in time, correct mistakes, identify weaknesses in internal control and correct them, create accountability. This is why we should regularly perform auditing. If you did not do it, you accumulate errors, frauds, and other things, and this will damage your business. Small losses will accumulate into major financial damage. If you are not auditing your business, weak internal controls remain uncorrected. Something that you'd have corrected, you can no longer correct it because you have not even found that that is the problem you have. He said, a problem known is half solved. If you don't know that there is a problem, how can you solve the problem? How can you even initiate solving the problem? So with audit, you find out that there is a problem and you initiate a way of solving that problem. So auditing will reveal weak internal control. Another one is there is a risk of tax authority coming to shut down your business if you are not doing auditing. You will not know whether you are paying the right tax or not. Auditing reduces compliance risk, improve readiness for tax inspection, prevent regulatory sanctions. Another one is poor cash flow management. We have discussed poor cash flow management. Without regular auditing, you have poor cash flow management. Your business can lose credibility with stakeholders. We have also discussed this in previous videos. When and how often should small businesses be audited? Audits should not be occasional or crisis-driven. We recommend the following practice: internal audits quarterly or biannually, or flows with the business. External audits annually. Cash and inventory checks monthly. Audits should be routine, not reactive. We want to say that not conducting regular audits does not save money. It delays the cost until it becomes unbearable. Audits expose problems early when they are still manageable. Strong businesses welcome audits because they promote discipline, they improve transparency, they protect owners from surprises. In conclusion, audits do not destroy businesses. Ignoring audits does. A business that avoids audits is like a patient who refuses medical checkups. The illness may remain hidden for a while, but when it appears, it is often too late to save the business. Don't wait until there is problem before you do audit. Conduct your audit regularly to correct anomalies in your business. Thank you for watching. This is the end of the series. We'll start up another series very soon. Please go back and watch all the lectures we have made in this series. 9 common mistakes that small businesses make that kill their business. It's going to help you as a business owner, even as a student, even as a worker in a company. It will help you. Like our video, subscribe to our channel. You have a lot of things to gain from the subscription. Share our video, comment. Thank you very much.